In today's video, I'm going to show you guys the 3-step strategy that made us $4,000 in just under 2 hours. So let's dive straight into the video and not mess about. Make sure you stay to the end of the video because I'm going to add a little free reward in at the end just to say thank you to the people that watch all the way through. So before we even start to look at any charts, I'm going to break down the 3-step process just so that we completely understand it before I start to show it on live charts. So step 1 of the strategy is to wait for a session sweep. Super simple, but let's dive into what that looks like. So let's say we're looking at price and price is making its higher highs and higher lows. Doesn't really matter, it's just moving anywhere it does. And this is how price looks, okay? And this is Asian session. So what we'll do is we'll draw a box around the highs and the lows of the entire Asian session. Let me just label this for you just so it's super simple to see. So now we have our Asian session marked. All we're waiting for is price to break above this high or price to simply break below this low. And what this means is we've had our sweep of liquidity. So we've had the sweep of session. So as simple as that, after we've drawn the box, is waiting for price to sweep this high or low. And later on, I'm going to show you a super simple tip to have this box automatically drawn out for you without having to worry about even doing this. So we're just waiting for that sweep of the session high or low. And then price will come out and most likely sweep the high or so on and so forth. Or it might move down and sweep the low. Simple as that. That's all we're waiting for. So now we move on to step 2. And step 2 is as simple as a market structure shift, or a CISD as some people might call it. Change in state of delivery. That's all they both stand for. Now let's have a look at what that looks like on a chart. So let's say that we're getting higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. We can tell price is moving upwards and it's bullish on this chart here, or in this trend, price is bullish. The price then makes a higher high, but then it makes a lower low. Now it's a lower low because it's lower than the previous low that was last printed. And then price will make lower high, lower low, lower high, lower low, and so on. So then, that's really poor at the end, ignore that. So then how we mark out our market structure shift here is we go off the last higher low that was created and see where prices broke through and created a lower low. So this is a market structure shift. Price here has dropped down, and this is where we can see that we've had a change in momentum. So we swapped from a bullish trend to a bearish trend here because price has started to move downwards. And the way that we see that here is a higher low drops to a lower low. It's as simple as that. The low is became lower than the last. And again, this looks the exact same on a bearish chart. So if price is moving down, it's making lower highs, lower lows, lower highs, lower lows. And then we break above that previous high. So that's a lower high. We've now got a higher high. And then a higher low, higher high, higher low, higher high, so on and so forth. We can see here that this was the last high that was previously, that continued to be lower. And then the next high after that was higher. So again, this here is where we would mark our market structure shift. So I hope that makes sense. We're marking our market structure shift off when the low has changed or the high has changed its normal momentum. So here we were bullish and we've moved bearish, and here we were bearish and we've moved bullish. Okay, so that is step 2 fully complete, and that's all we'll wait for in the second stage. Moving on to step 3, here we're waiting for a fib retracement. And that sounds super confusing and scary, but it's actually as simple as using a little tool that we have here on the hotbar, and I'll show you how to get that in just a minute. So let's say we've got our Asian session here, and we've got our box around it, and then price has came up, and it's swept this high here, and then it's continued up, whatever. And then after that, it's made its lower low. Boom. We can draw our market structure shift on here that we've just learned. Okay, perfect. So we've swept this high, as we can see here. I'll just write sweep. Oh, what have I done here? I'll just write sweep. There we go. So we swept this high. We've now came up. We've had our market structure shift. And then we draw our fib retracement. So this is this tool here. You can also find it on the side of your chart here, just there. Or if you click this, it'll say fib retracement. I've put a little star on it, and that puts it into your hotbar here. Okay, perfect. Ignore this. So we take our fib retracement by clicking here or clicking there. And we draw our fib retracement from the top high on the leg that has created that lower low, or in the other sense that I'll show in a moment. So this is where our fib retracement will be drawn. Not all the way down, only on the leg that has created the market structure shift. Now your fib won't look like this at first. So if I click on, if you want to pause the video now, this is exactly all the settings that I have for my fib retracement, and this creates what we call a golden zone, where price normally always retraces to after it's made a big move down or a big move up. So I'll let you pause here for these. I don't think I've changed anything on here. That doesn't matter. Visibility, I don't think I've changed anything here. But just make sure you've got all these settings, and then we'll draw our fib like this. So we draw it only on the leg that's created the market structure shift. So now looking at the opposite example, price will come out of Asian session, and this can happen anywhere, but we make our lower high, lower low, lower high, lower low, and then we come down, make our higher high, so on and so forth, and we move upwards. Okay, perfect. It's not a great example, but there you go, now it's better. So from this, prices came out, it's made lower high, lower low, lower high, lower low, all the way down. Let me come down here slightly. And then we've had our market structure shift here. This was the last lower high, lower low, and then we've had a higher high. So here, our market structure shift again. And then we draw our fib, take it from here or from there. We take it from the bottom of the leg all the way to the top of only the leg that's made the market structure shift. So we drag that out and we tap that, and as you can see, accidentally I've made it, price has come back, and that's what we would expect price to do, is we draw it on this individual leg, and then price will come back, tap that point, and then continue to move upwards or in the direction we want to. So this is step 3 of the fib retracement and how to use that. How would we enter a trade off this? So in this position, we would put our buy on the 618 level, and then we put our stops just below the lows, and our highs at the top of Asian session. That's what we would want that's what we would want our ideal trade to look like, entering off the 618 and waiting for price to tap it, come in, and our lows are stop loss, and our stop loss is below the lows. So this is how the example trade would look. Now let's look at this on a live chart and see how it actually plays out with a trade. So as you can see here, I have pre-marked boxes around all of my sessions, Asian, London and New York, moving throughout the entire chart. And how I got this is because I have an indicator on called Sessions by Lux Algo, which is super simple, and it's the only indicator that we really need to use for this strategy, which is amazing. So if we click indicators up here, as you can see, I already have it starred here, and we just type in Sessions Lux Algo, then it will be the first one. This is what it looks like. If you just want to get that onto your chart and star this, then it will always be on your chart. And these are the specific settings that I have. If you want to again pause the video and make sure that yours are the same. I don't think I've changed anything here. And then this is the important one, the times. So these are my times for all the sessions. Just pause the video again. Make sure that you've got your settings the exact same as mine throughout the whole point. Okay, perfect. So once you've done that, your chart will start to look like this, and we'll play an example trade moving here forwards. Okay, so now your chart should look like mine with these pre-drawn boxes, so we'll move on to step 1. So if you remember, step 1 was to wait for a session sweep, and then step 2 was market structure shift, and step 3 was fib retracement. Okay, perfect. I'll just keep that there so we can continue to refer to it. So with step 1, we're waiting for our session sweep. So we'll draw a line on the high of our box, and we'll draw a line on the low of our box, and we'll wait for price to sweep above or below this line. I'll just drag them out slightly. Okay, there we go. So if we play price here, we can see price has just swept above that line. There we go. Price has clearly swept above that line, and I've accidentally made the next move show, so that's fine. We can delete this line, and we can now write on this line that we've had our sweep. Okay, perfect. So now the next stage, as we can see up here, is our market structure shift, or our CISD. So just to make this look super simple for you guys, so I can break it down, I'll swap to a line chart, and you can see here it's a lot easier to see highs and lows. So we've got our higher low, higher high, higher low, higher high, higher low, higher high, and then higher low. So as you can see here, price has made a shift in structure. We were moving upwards here, and now we've swapped. So we can draw this. I wouldn't recommend drawing this on here actually. Let's move back to the candles chart. just so that we can see it clearer and make sure that we get any wicks in. We've had the low here sweep and create our market structure shift. Okay, perfect. So this is our shift marked out. So now we'll wait and move on to phase 3, which is the fib retracement. So if I play price forwards, we can see that we've had a bullish candle straight after this leg. And although price, there we go, although prices continue to move down here, we've moved downwards, created the shift, and then we've had a bullish candle moving back upwards. So realistically, this is the entire leg here. We don't want to drag the fib all the way down to the bottom. As you remember, I said on the previous example, when I was showing you the drawings, we only mark the fib on the first leg. So if I mark the fib from the top of here to the bottom of this leg, like so, we can see that for me is only the first leg because we've had a bullish candle straight after. So this is leg 1. We don't drag it all the way down to the bottom because we only wait for that leg. So now what we're going to do is we're going to wait for price. Let me find, there we go. We're going to wait for price to come back up and tap this line at any point. And what we'll be doing is entering a sell on this line with our stops just above the high and our take profits just below Asian low for now. So we wait for price to come in. As you can see here, we've got extremely close. We've almost tapped it, but we haven't yet hit that 618 line. So because of that, we won't enter the trade yet. We'll just wait, play patient, and wait for price to come and clearly tap the line. And there you go, perfect. As we come into New York session, we've perfectly tapped that 618 level. So at this point, we would be in the trade. Now, as you can see, if I play this trade through, we've completely smashed take profit. However, this is only 17.4 pips, and as we've reanalyzed the trade, you can see here that we've already taken Asian lows, so the next point of liquidity would be to move down and take London lows, or with how strong price is moving here, we can move our stop loss to break even, so we have no risk in this trade anymore, and we can continue to let the trade run at the next point of liquidity that we can find if we really wanted to. So if I zoom all the way out, this is a point of liquidity. I'll just get a horizontal ray because it might make it easier. So as we can see, here, this is a point of liquidity. This is a point of liquidity. This is also a point of liquidity. And one more for you. This is also a point of liquidity. So if I zoom back into the trade, all these is previous lows in the market that are points of liquidity that price will want to come back to. So if I zoom back in here, we can set our take profit now to whichever line you feel comfortable doing. We can move it to this point of liquidity, this one, this one, this one. It makes no difference. But what we specifically did in this trade is we just aimed for 40 pips, which was 4% for us, which is $4,000 on a $100,000 account. If you're using a funded account or a personal, $100,000. If you have a 40 pip take profit and you use a 10 lot size, that's $4,000. And we keep quite strict with that. So this was where we set our take profit. And if I play the trade through, price just continued to move downwards, and we've hit our take profit here. I think price actually moved lower. Probably took all, yeah, it took all of this liquidity out. So let's wait for price to actually start moving back upwards. And it's still not moving upwards, which is ridiculous. And we've came out of New York session at this point. So if you really wanted, you could have chased 60, 65 pips, which is $6,500. We played slightly conservative and just took $4,000 on this trade. But it just shows the potential that you can reach with this strategy. It's literally 3 steps, as I've shown here. Just these 3 steps can make you $4,000 or $6,000, as simple as that. And you're going to be with no risk as you're halfway through the trade. And it's 3 steps that gets you exactly to profitability. Now that is super simple, and it requires little to no thought, especially if we put this indicator on your chart and you've only got 1, 2, 3 steps to follow, and you can always look back at this and put this trade on whenever you see it on the chart. Now, some quick additional points I want to add if you do want to just have that extra bit of confluence is always look for, tip number 1 would be always look at higher time frame bias. So that just means if we move to the 1 hour and we move out, we can see here price was already bearish. If I move back to this line chart again to make it easy for you to see, we've had lower highs, lower lows, moving all the way. It's very simple to see on the candle chart as well. Price is already moving downwards, which just gives us that extra bias from the higher time frame that we know we're looking for sells. Now, point two that I would like to make is we personally trade this on FX pairs. So we do Euro USD or GBP USD. Now, these are the pairs that we personally trade on, and we try this strategy on every day, and we have tons and tons of backtested data that proves that this strategy works, as you've just seen in that video there. Now, by all means, you can try this on different pairs. You can try this on futures. You can try this on commodities like gold. That's entirely up to you. That's at your discretion. The strategy that we've shown here works extremely well on Euro USD and GBP USD. Now, I don't doubt for a second that it wouldn't work on loads of other charts and loads of other different types of trading methods, but this is the one that we use it on. That's just something I want to add just to give you guys that extra bit of clarity to know what to trade on. So I'll just show proof here on my right of the $4,000 that we managed to make taking this trade. And I'm going to show proof on the left here of all the mentees within our group that also got into the trade and managed to make themselves some profit. So moving on to the free reward that I spoke about at the start of the video. If you have made it all the way to the end of the video, I just want to say thank you for watching this far, and you will be rewarded. So if you guys want a free playbook that's going to show you step by step the strategy and have it in a PDF form so that you can always refer back to it if you don't want to sometimes watch this video, or you also want access to a free journal which looks like this, then what I'm going to do is I'm going to leave a link in the description for you guys to opt in, and you get the free playbook alongside the free journal and tons more free advice and assistance that you can access just from clicking the link in the description and signing yourself up to achieve that. But apart from that, I hope you enjoyed the video. Please don't forget to like, subscribe, all of the other stuff, and have an amazing day.